Welcome to the Multifamily Investor Nation podcast. I'm your host, Dan Handford, and with me today is our special guest, Dallon Schultz. Dallon, welcome to the podcast.
Dan, appreciate you having me this morning.
Well, I'd love for you to kind of get us started here before we dive into this acquisition that you had out of Coolidge, Arizona, which is just about an hour south of Phoenix. This 8-unit getting ready to be 30 units and even some unique things on that, on the extra land that you acquired, which we'll get into in a little bit. But before we dive into that acquisition, and you closed on that one in December of 2020, before we dive into that, tell us a little about who you are, what your background is, and where you are right now on the multifamily side of things.
Sure. No, I appreciate that. So my background is actually not in real estate, and I've come to find that that's all not that uncommon with the people I associate with. So I actually have a bachelor's in nursing. I went to school for that, worked for a couple years in the ER and on a cardiac floor. But a few months into that career, I realized it wasn't for me. I went through a pretty traumatic injury that almost put me out of work. I broke my leg, and I realized that this safe, secure job in the medical field wasn't so safe and secure. And so that started my route, my desire to get more involved in real estate. So I read that purple book. I'm sure all of us have read it. If not, we need to. Rich Dad, Poor Dad. 2 weeks later, we bought our first fourplex. And then that's just what jump-started my drive and desire to do real estate full time. And so about a year and a half ago, I left the medical field completely. And this is what I do full time now.
Awesome. That's exciting to kind of hear that transition and how you've kind of gone from the medical field and into doing this full time. Well, without further ado, let's go ahead and jump into it and talk about this asset that you acquired in December of 2020, just last year, and dive into it first about how you found this particular opportunity.
Absolutely. So I live in the Phoenix area. Those of us that are familiar with the multifamily market, Phoenix is one of the top in the country, which is making it very competitive. So my team and I were looking in that small cap range, probably 50 to 70 unit type of value add play. And we just weren't gaining traction like we were hoping. So we were going at it for about 6 months. And then we came back together and we said, hey, this something just feels off. Maybe we need to pivot a little bit. So my partner at the time, being a licensed contractor, we've always had a desire to get into development. So we said, hey, why don't we pivot a little bit rather than looking for the value add? Why don't we look for some land and develop? Especially now in the Phoenix area, you can almost build new for the cost of a product that's 30 or 40 years old. So we transitioned a little bit. And we came across a property about an hour south of Phoenix in a small town called Coolidge. A lot of development happening down that way. But the property consisted of an 8-unit complex, which we weren't all that excited about. But right next door was an acre lot already zoned R3 that we could build additional units on. That's what we were interested in. With it being our first development, we didn't want to jump into a 100, 200, 300. We didn't have the resources or the team to do that. So this was the perfect fit for what we were looking for. So I called up the broker and said, hey, we really like the property. We want to take a look at it. So we go down there, and the 8 units built early 80s, what you would typically see for a decent value add play. And then the lot right next to it, which was being sold, was an additional acre. And it looked great, decent part of town. And come to find out when we were doing that site visit that the same seller owned about another 2.5 acres adjacent to those 8 units on the other side. And so we said, hey, is he interested in selling that as well? And he said, yeah, I could probably talk to him. So what we ended up doing was putting together a package deal. And so we acquired those 8 units along with about 3.5 acres of land, some that was zoned commercial. And then, as I mentioned, the other parcel zoned for multifamily construction.
So when you first heard about this asset, how long did it take you to kind of get down there and actually kind of, get your boots on the ground and start to maybe tour the facility a little bit?
A few days.
Yeah.
So this property was actually listed on the MLS and for over a year, which blew my mind because you don't see stuff listed for quite a while. So the first thought is, okay, what's wrong with this property, right? Whenever you see something listed for a while, you wonder what's wrong with it. But it came across our desk. I called up the broker, and within like 2 or 3 days, we were down there with boots on the ground, looking at it and walking it. We didn't get inside any of the units. We weren't under contract. We weren't looking to. Excuse me. At that time, we just wanted to put eyes on it and really check out the area, check out the town, because we weren't as familiar with it.
That's good. That's great. And when you were starting to work on, submitting offers on it, were there any other people competing on it, or were you pretty much the only one at that point really submitting an offer and having a potential dialogue with the seller?
We were the only one, which again blows my, like, I don't know. It's one of those deals that just, it seemed to work in our favor. And every time we were looking for a reason for it not to work, there was 2 or 3 reasons that it should work. And it just, I laugh about this. So a couple of years ago, I attended an investor conference in Texas, and Grant Cardone was actually one of the keynote speakers. Not to get off on a tangent here, but it'll come back. So bear with me. One of the attendees asked Grant, he said, "Hey, when you're buying these multifamily properties, what is it? Like, what's that key thing that you look for?" And Grant said the vibrations. It's that feeling that he gets when he walks onto a property. And we all kind of laughed, but bringing it back to this deal, there was just a feeling. I can't explain it. There was just a feeling. It just seemed right. Mm-hmm. And the more we looked into it, the more opportunities and potential we could envision with it. So we were fortunate. We were the only ones looking at this one. It was listed for over a year, and that enabled us to really do a lot of due diligence up front prior to submitting an offer, which I think helped quite a bit.
And what did you end up purchasing it at?
I think altogether, the 8 units and the land, we were just under, I think we were around 850,000.
And what were they asking for it all?
That's a good question. More than that.
Sure. And yeah, I was going to say, and as far as the 850 is concerned, was that your first offer, or was that kind of like a negotiation back and forth and you settled on the 850?
Yeah, that was a negotiated. And part of that was because since we were buying all the land that they had, that they didn't initially list, we were able to work out kind of a package deal. So on paper, we had it broken out into 3 separate purchases because it was 3 separate parcels, right? Mm-hmm. So I'm trying to think back to give you that whole number. I think they were asking initially for the 8 units and the land around 800, 850. So we ended up getting that initial listing along with the 2.5 acres for right around the same price.
And so let's move a little bit now towards the due diligence side of things. Was there anything that came out during due diligence that kind of was surprising, anything like that?
No, not on this deal. And like I said, I mentioned we were looking for reasons not to do it. Right. Mm-hmm. The previous seller replaced 6 out of the 8 AC units. He replaced almost every single water heater. So any of the major potential capital expenditures were already taken care of. The roofs were probably the worst shape, and we were able to negotiate a credit with the seller because of that, and got in there and redid the roofs as soon as we got it in our name.
So walk us through the kind of overall business plan and vision that you and your partners have for this particular asset. Obviously, I would assume you're probably going to maintain the 8 units that are there and add on and maybe add some additional things like you've been kind of hinting at throughout. But walk us through the kind of the overall vision for this asset.
Yeah, absolutely. So the beautiful thing about this property, and one of the reasons we loved it so much, is although those 8 units are small, doesn't produce a lot, it pays for the land. that we have. So we had time to figure things out because the asset was paying for that expense, right? So our initial plan was, we saw the 8 units, we saw the acre of land next door, we'll just copy it, we'll just mirror it. So we began our conversations with the planning and zoning supervisor in Coolidge and shared with him the land, what we were hoping to do. And he said, hey, I'm not sure if you're aware of this, but if you actually combine those parcels, since they're touching, you can alter the setbacks and actually allow you to build more units on that 1 acre lot. So the zoning as is down there in Coolidge, you can build up to 13 units per acre. But with these 2 lots, parcels connecting, you have all the setbacks running down the middle and around the edge. So if you combine those, it does away with that. So on the one parcel, we had the existing 8 units. On the parcel we were going to develop, that actually enables to build 18 new units. And then we said, well, wait a sec, what if we rezone this to R4? What can we do there? And they did their math and looked at the parking and said, hey, you could do 30 units on that 1 acre lot. So developing that 30 units along with the 8 units, now we have a 38 unit complex, which is I guess in my opinion, a great start for our first development. So,
and is there going to be additional things like self-storage or other types of assets you could put attached to this property, or are you going to do just focus on the multifamily?
So no, great question. So the land on the other side of this property has highway frontage. There's one main highway that cuts through the town, and that was the commercial lots that we acquired along with this purchase. And so on that one, we're actually developing RV and self-storage development. So in Arizona, every community has an HOA. Like it's hard to find one without it. And for those of you that are familiar with HOAs, they can be a pain in the ass sometimes, or a lot of times, but they don't allow you to store boats, trailers, RVs. You can't have that in the neighborhood. So Arizona is a great market for RV storage because for the most part of the year, it's just sun, right? So there's not a lot of weather. So you'll see these RV storages pop up, and all it is a walled-in parking lot with spaces that people park their trailers at. And this property, we were also able to build some self-storage units as well. So we'll have a nice little combination there.
That's great. That's awesome. So what did you end up doing as far as the financing on this deal?
So this one, with it being a smaller deal, is just a joint venture. So us and our partners, it's not one that we had to syndicate or raise capital for. So between some capital we put in on our own, and then the investors or the partners we brought in, we're able to take it down that way.
So no banks, no debt,
nothing. Yeah, I'm sorry. So banks, yes, we are leveraging it with a local bank.
Okay. So talk us through the kind of debt part of things from that perspective. What were the terms that you got and stuff like that?
So this was a pain for this property, and with it being a smaller deal, under $1 million in a tertiary market, it was a freaking nightmare to get financing, to say the least. So when we got this deal under contract, at that point, we had a letter of intent or a letter of interest from the bank saying, hey, we'll do it. We looked at the numbers. We ran the preliminary. It looks good. Let's do it. So we went under contract, started getting the bank all of our information. And about 3 or 4 weeks in, they said, hey, we can't do this. And they pulled the plug. And I tried getting an explanation, and there wasn't a good reason. For some reason on their end, whether there was their underwriters, whatever the case was, they decided to pull the plug. Now we're 3 or 4 weeks into our deal, and we have to close in like another month. Fortunately, I had the foresight to add some extensions into our PSA. So we had two 15-day extensions that we could purchase for an extra, I think it was $3,500. So at this point, I'm scrambling to find another lender. Called about half a dozen, sent them the number, sent them the deal. I had one come back and said, hey, looks great. Talk to our team. We're going to do it. I'm like, sweet. Okay. We're still on track. We have those extensions. 2-3 weeks into it, pulled the plug on it. So now we're a month and a half. We're at this point, I remember we're about 45 days from closing with the 2 extensions. And I was scrambling. I saw the potential.
I can imagine, man.
Yeah. I saw the potential on this property, and I wanted to make it happen. And I knew there was going to be challenges, but in any deal that you go after, there's always new challenges. I don't care how long you've been in the game. Every deal is going to surprise you. There's going to be something new that comes up. So I reached out to my network and in desperation, and just shared with anyone and whoever I could the situation we were in. And a good friend of mine, good colleague, reached out. He said, hey, I've had really good experience with this mortgage broker. Reach out to him. So I did. So this was our third one, and he got it done. He got it through the finish line, and we actually closed on this deal and recorded a day before that last extension was up. So
nothing like waiting to the last minute there.
Oh, dude, yeah, I tell you, I was definitely clenching throughout that entire process, and just making sure that we got it done, and we did, we did, and it was a nightmare, but it was very educational as well, and looking back, a good experience. It sucked being in it at the time, but looking back, definitely learned a lot.
Sure. And what were the terms you got on that loan?
Yeah, so that one, we used a smaller local bank, and they knew that we were going to develop in the next 6 to 12 months. So what they did was kind of a hybrid bridge loan, if you will. They said, hey, we'll do a short term, 12 months, I think 4.5% interest only. And then we'll transition that once you get your building docs and proposals from your contractors, then we'll just reapply for a construction loan. So as far as the construction loan goes, I don't have those terms for you yet, because we just got our plans back last week. Actually, it's taken that long to go through the city, get our site plan approved. So we're hoping to have a budget here in the next 30 days or so that we'll present to the bank. But they were willing to do that short-term 12-month interest-only loan to give us time to get the ball rolling. Just as we weren't as interested in the 8 units, we were interested in the development. This bank was too. They didn't care so much about the 8 units, but they saw the few $1 million of development, and that's why they were willing to work with us. So we were very fortunate being able to find that local bank through our broker, and have started a really good relationship with them, and we hope to continue using them on future projects.
That's good. Let's talk a little bit about how you structured it with your investors. I know you mentioned being mostly or all JV partner at this point, just kind of friends or family or whatever. But walk us through how you set that up and how you structured that with those investors.
Yeah, so kind of 2 separate deals. We got the storage deal and we got the multifamily deal. So the storage deal, our partners have much more experience in that space. So we came on as minority owners. I think we have 10% of the entity. But we've been doing all the preliminary plans, development. I've been meeting with the city. And so we are going to work in a development fee, which I'll get out of that, and then have some ownership there with the option to buy them out in a couple of years when we refinance. So that's on the storage side. On the multifamily side, we came in, there's 3 of us involved. So my team and the other majority partner, we had 45% each ownership, and then a minority partner at 10%. And so we all brought in capital to the deal, and and me specifically putting in a ton of sweat equity to just to get this rolling, since I'm local and boots on the ground.
That's good. That's exciting to kind of see that. How long did it end up taking you to raise the money for the deal?
A week, maybe.
A couple phone calls, maybe a few conversations.
Yeah. A couple phone calls, a few conversations, and the partners that we brought in onto it, when we identified the property a few months prior to closing, we started reaching out. We said, hey, we found this deal. This is what we're planning on doing. This is what it's kind of looking like. Let us know if you're interested. So that way, once we were ready to sign a PSA, we already knew who was ready to go. So these were people that we already had relationships with, which I think is important for your listeners to realize. Whether you're syndicating or whether you're doing a small joint venture, people invest with you because they know, like, and trust you. So had we not had those relationships prior, I don't know that we would have been able to take it down. So whether you have a deal right now or not, work on those relationships. Talk to those people that you would need on your team to take down the project if you were to get one, and start nurturing it now, because 2 months from now you might have an opportunity. And if you don't have those relationships in place, good luck.
No, I definitely agree with that for sure. It's not, I see so many people try to find a deal and they're like, now I need to go get money. It's like, no, you should be trying to reach investors and build those relationships ahead of time. That's why they call it investor relations. It's because you got to build those relationships earlier on. Well, let's talk a little bit about let's just see if you have any more to talk about maybe any other issues that came up during the process, or maybe just something that interesting that happened during this acquisition that maybe we haven't touched on just yet, or have we pretty much covered most of it?
So most of what we talked about was up to closing. Then we had the 8 months of development, right? So that was something that was new to us, as I mentioned. And so there was a big learning curve. So we closed on this end of December. We're now end of August, almost into September, and just now getting our construction docs. So some of that was due to our inefficiencies, and some of that was just the process, right? So going into this, being very a positive and optimistic person, usually we closed end of December, and I said, great, April of this year, we're going to be breaking ground. We're end of August and we're still not breaking ground. So it did take a little bit longer.
That's development for you. Things happen like that all the time.
Yeah. Now, with that being said, there's still things that come up. That commercial lot we bought had a billboard on the land, which was kind of cool because that's additional income that we get just from renting out to the billboard company. The town, we come to find out, the town had changed their codes and no longer wanted billboards on the land. And since we bought the land raw and we were developing it, they said, hey, if you want to develop, you got to remove that billboard. We're locked into a lease for another, I think it's 8 or 9 years that we inherited when we bought that property. So trying to negotiate with the city and say, hey, look, we're not ones to breach contracts. That's not what we do. We inherited this. It's out of our control. And trying to work with them to say, okay, the billboard can stay for now, but you need to remove it when that lease is up. So little things like that came up. Now we had to apply for some variances to maximize the space so that we could generate as much revenue and build as much as we could on that lot. Our civil engineer went down to Columbia to vacation this summer and got stuck down there for a month and a half longer than he was expected to because he kept testing positive for COVID. Even though he didn't have symptoms, he was kept testing positive, so they wouldn't let him fly home. So that pushed our civil plans back another month and a half. And that was nothing any of us had any control of, right? So just being patient and working with the team members as much as you can. It's easy to get frustrated and you feel that pressure and that drive to want to start building and pushing things. But you got to keep in mind that these people are here for you, whether they're directly on your team or working for the city. You want to keep those relationships good and have a collaborative type of experience, because that's just going to keep things moving smoothly and building those good relationships with the important people of the town, because we're looking to do more development down there as well. So the last thing we want to do is burn those bridges. So go with the flow, realize that things are going to come up and you just have to address it when they do, and just take some time to act rather than react.
Very well said, Dallon. Very well said. How can the listeners reach out to you if they have further questions for you about this particular acquisition, or maybe they want to continue to follow you a little bit more?
Yeah, so probably two of the best ways: they can follow us on Instagram at Rev Multifamily. And if they want to reach out via email, they can email me at Dallon, that's Dallon, at revequitygroup.com. And look, I'm not one to hold anything back. I'll share the good, the bad, and the ugly. And I feel like there needs to be more of that, because not all real estate investing is sunshines and rainbows. So I don't hold anything back, and happy to answer any questions people might have.
Sure. That's great. Well, thank you so much for taking the time out of your schedule. I know you're busy, and spending some time with us here and sharing with our audience a little bit about this acquisition and the development side. Very unique acquisition, and looking forward to continuing to follow you as you close more deals and as you finish up this particular development, and look forward to having you on a future episode as you continue to close more deals.
Awesome. Yeah, this was a great experience, and I appreciate the opportunity to come up. And I actually heard of you, Dan, because of one of the meetups that a couple people here locally put on through you. So I appreciate you providing not just the podcast, but the meetup platform to enable other people to learn about real estate. It's an exciting game, and us weird folks need that tribe and that group of people to really connect with. So I appreciate it.
I appreciate that as well. And again, thank you so much for being on, and looking forward to continue to stay connected.
Awesome. Likewise.
Thank you so much, Dallon.